Hi, this is Ron Janish, and in this presentation, we're going to talk about trading Bitcoin with classic Andrews techniques that, ironically, will be with the trend only. Now, here's something you need to know, that if you hate trading Bitcoin and you'd rather trade, I don't know, gold, silver, stocks, the S&P, cotton, sugar, you can use the same approach. Doesn't matter. The other thing is that if you can't draw a straight line, and for some people, believe it or not, that is too difficult, then you can substitute other techniques, RSI, stochastics, all kinds of wiggly lines, all that kind of stuff instead. But the basic concept will be the same, because what we're going to talk about here pretty much is what I call the triple play approach, and we'll see how that works exactly, okay? Now, if we were talking about developing a new product to eat, you would need to include sugar, salt, and fat in order to get people to crave your product. Why? Because that's what works. Go take a look at a Snickers bar. I mean, that's what works. Okay, now during this presentation, Andrews and Babson concepts will be used to show trading in Bitcoin. It could have been done with gold, bonds, stocks, or like Professor Andrews demonstrated at some time ago, weather patterns. Same thing. Now, as you will be able to imagine, Andrews' teaching can be substituted with anything that actually works. Now, the first concepts that are usually learned when it comes to trading is the simple concept that your friend is the trend is your friend, whatever. And then you get this idea that using a moving average or something like that is gonna help you determine the trend. And that may be useful. And what you're gonna find is that if you use a moving average, it's gonna change. That it depends on the time frame you're using or what you're trading, and oh God, every moving average works, but in what, So here's what we're going to do. It says here, for one of the first concepts learned in trading is that the trend is your friend, and trading with the trend leads to greater profits. This brings us to the question, after determining a reversal in trend, where is a good place to enter the trade to minimize risk and increase reward? We're going to look at that specifically. Now, to help answer this question, we're going to look examples of Andrews, specific Andrews techniques. Remember, like I said, you can go substitute other stuff if you want. I don't know how well it'll work, but you can substitute other stuff if you want. Now, there are three ways that most traders enter the market. The most often one used by successful traders is by waiting for a breakout. The second is a pullback, and the third is that the market turned at a likely reversal point. Now, what I suggest to you is that by waiting for all three of those to have occurred, the trader will usually enter after the trend has been established and there is less discomfort with drawdown. Hey, drawdown, that's heat or whatever, sucks. And if you buy something for $1 and it's on the way to 100, chances are 65% or more of the time on its way from 1 to 100, it's going to be in drawdown. In other words, after it makes a new high at 50, maybe it'll come down to 48 or 47 or 25. That's drawdown. Okay. So what I'm suggesting here, by waiting for all three to have occurred to enter the market, the trader will usually enter the trade after a trend has been established and there is less discomfort with drawdown. This is because if you enter after a breakout, there is nearly always drawdown beyond your entry point. But you enter at a breakout because you don't want to miss the move. And this is classic, because you miss out on the trade, because sometimes it just breaks out and then keeps on going, and you can't get in unless you just jump on it. That's the way it is. And here's an example. Right here, you had a reversal in trend, boom, broke out. So if you went short the breakout, maybe you went short here when it went below the low that previous day, and then you got in at a point that was much better than everybody else will get in for a very long time. Okay, but I don't expect you to do that. That would be silly. That would just be some pretty incredible trading and very hard. So now my friend Professor Andrews taught that after prices zoom through the median line, see how they zoom through it here? They will pull back to it and then go further in the original direction. Simple concept. Actually, I wrote about it in the early 1980s in Stocks and Commodities magazine. Prices zoom through the median line, they retrace back, and then go further in the original direction. Not difficult. Now, as you can see in the above chart, prices have zoomed through, specifically down, through the median line, thereby fulfilling one of the three requirements. So they zoomed through, came back to it. So they fulfilled the requirement of a specific pattern or coming back to a certain point. Now, if we take a look at right here, we can see that prices have broken through. So they've done their breakout, a nice big breakout. Probably these are probably weekly pivots along here, right? A breakout, and then you have the pullback. So you're looking for three things. You're looking for a breakout, a pullback, and then reversal at a certain point or a certain pattern type thing, stopping it. This could be the 50% point, making it back to 50%. This could be the high here could have been double divergence in RSI, stochastics, whatever. Any one of a number of things. I use Andrews, simple kind of guy, that I am. Now, in the above Bitcoin chart, you can clearly see that the breakout and pullback criteria was met when the prices went back to the trend line. All three criteria were met, and it was an excellent place to go short Bitcoin. Now, you can look at this chart and say, yeah, but that's great with 20/20 hindsight, yada, yada, yada. It is great with 20/20 hindsight, I agree. And if you look at the video that I made back when, this is the link to it here, on andrewscourse.com is the channel, is when price was up here, I made a video saying, hey, three things are true, folks. Down we go. And down we went. Okay? Now, here's another example of this. So we can see here, price went down. And we can see here, right in this area here, that we have three things going on. We have a breakout to the upside. We have a pullback, which briefly went to new lows. And this particular pattern here is an Andrews pattern that says, hey, more than likely going to have a reversal here. And that's called an EP. So we're using three Andrews concepts Very simple, a breakout, a pullback, and an EP pattern, which is very normal to have at a bottom or top. And if you want to do some research on the web, if you look for something called reverse point wave, which is what Willis Wilder called it, and it's been called other things, but we in Andrew's course, we call this an EP, expanded pivot formation, and that's because these pivots here, if you draw a line from here to here, see how that line would go up, and if you draw a line connecting these three here, this goes down. Okay, normally you don't have that. Okay, so this gave you an excellent buy signal right here, because here all three things were true once they made it down to here. And then afterwards, there was a bit of discomfort with the pullback again, but away she went. Now, what I suggest you do is, if you know the Andrews techniques, make a list of the things that you would look for if you were looking for a price reversal according to Andrews concepts. Make a list of those. And then take a look at adding these two other criteria, the breakout and the pullback. See what kind of entry point that gives you. If you don't know the Andrews concepts and you don't want to send me a ton of money to learn them, because I don't do this for the cheap, for cheap or no money. Anyway, what you do instead is you test it out. Find your own reversal points, likely reversal points. For example, I'll give you one or two for free that I definitely don't use. One is double and triple divergence in RSI and stochastics. If you have that in both and you have this stuff here, you've got something to look for in terms of a reversal point. Okay? Anyway, this is Ron Janisch signing off and wishing you well from beautiful Oceanside, California.